We're coming right back with Chris just after this.
Real quick, I want to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
All right, and we are back with Chris Pulver. Hey, Chris, how you doing, man?
Doing well, Nick. Happy Tuesday. Everything good for you?
Yeah, doing well. Good to have you back on the show. We're seeing a little bit of a bounce here on the stock market today. Nasdaq's up 0.82%. You got the S&P up 0.63. The Dow's up just shy of 0.3. Is this bounce going to last, Chris? What do you think?
I think this is what we talked about yesterday. This is the pullback. I think that the market's being driven by positive earnings right now. I just had a trade this morning get limited out on Spotify. We had a big move. It actually went right along with expectations. I was calculating about a $32 move. We had a 270 to, I'm trying to think the close yesterday. We had a little bit of moving and shaking, but we were down to 272, ripped all the way up here to 314. So we beat expectations, top and bottom, and had a slightly larger than expected move, which makes obviously trading earnings really, really easy. So, good trade. I mean, it closed out for about $1,000 this morning per account for
Nice.
Spotify. And but notice what's happening here. We're right back to the highs. We're starting to fade a little bit. Take a look at the market. Here's the SPX. I mean, it's nice to see that the 6-day losing streak has been broken. We're right at that NVIDIA gap at that 23% pullback level. This is what you and I talked about yesterday. If we see high, low, a little bit of a retracement, I do think that the bears could still take this lower. But with this week, with all of the big company earnings, I mean, we're talking Mag 7, Nick. So, I mean, having Tesla today after market, not that Tesla, I don't think anybody expects Tesla to be good. But if they somehow surprise to the upside, that could be a nice little comeback story. Boeing, with all the negative press they've had for Q1, maybe they can right the ship a little bit. Meta would be a big one on Wednesday after market. Then, of course, Google and Microsoft on Thursday. You want to talk about resuming the AI hype? I think Microsoft's going to be a big player there as well as Google. So, we mentioned it yesterday. If the AI led us to this rally and rip for this first part of the year, if it kind of resumes the appetite for AI and tech, I'm really curious how the market plays out this week. So I do have positions like this. You can see on my chart, I'm looking at a sell trade at 51.65. I'm looking at it's essentially two levels. As long as price stays below 51.65 or stays above 48.10, I've got credit rolling in on both of these. So I'm still kind of containing the move on the upside. And the nice thing is I was essentially establishing moves where I didn't think we were going to drop too much lower this week. I was expecting that pullback. So these positions are already looking to be, decently profitable. These expirations are out to Friday. And then I capped this move at 51.65, which is just above the what was our floor, could now be resistance, and that'd be a heck of a recovery if the market from last week's close is going to rip up here around 3.6%. So just to put this in reference, I look to see if we go to a weekly time frame. The last time we had a move that big, 3.5 to 4%. Was essentially that giant rip right out of the gates in October, November. That was a 5% week, which was like all systems go, broad market, big pivot from from the market with, I don't remember what major news event that was, if that was a non-farm or if that was a CPI reading, but man, that was such a strong bottom put in and the market ripped like crazy, and then it was just off to the races. So I could see, nice maybe 2 to 3% rally for this week, but I still think, like I said, the bears are gonna at least show up again, and this is a pretty technically good spot. So high, low, lower high. And then this is where the big question mark lies for me the next couple of weeks is, will we see the bears fade this move again? Or to your point, you're buying into these levels. So are you just looking for all-time highs again? Are you thinking that the market's that resilient?
So I've got a couple things that I've got on, Chris. I've sold a out of the money put on Tesla after a conversation. It's pretty way out there. It's 115, but it could get hit. We've got earnings today. I sold a 1 month out, so it's a longer term. Again, I wouldn't mind having some in the portfolio. So if it does tank, I'd be happy. And if it doesn't, then I'll collect the premium. So that's kind of my situation on Tesla. Which again, the volatility on that thing is crazy. The IV and the premium is insane. But I've also been assigned on the S&P 500. I got shares in VOO. Those are in profit now. What I did is I sold calls against them right at 480 on VOO. I know you can do SPY. Frank asked me all the time, why don't you just do SPY? Because there's way more options contracts available. The reason VOO is because I like to trade SPY, and I'm just OCD. I want to have my trading momentum stuff in here and then my options in a different one. So I don't mind doing monthlies in VOO. What I've done is sold a call at 480 because, like you, while I want to leg into this market if it continues to go lower, I also think that there's possibly some further, struggle, whether it be taking out the lows or just like you're pointing out, maybe just some bearishness in the mix. I don't think it's going to be a big shot to the upside. If it happens, I'll be taken out and I'll take a profit on the move and take the premium. But most likely, I think we either go sideways, bounce slightly, or lower. So I don't think we're going to see a screaming recovery right away. Now that we've got on the horizon the talks of higher for longer being a real thing. You're having some optimism come into the markets today with services and manufacturing cooling a little bit. But I don't know. We'll see. I think that the stock market, I'm longer term still bullish. Think that the year could still be very positive, but kind of positioned for sideways or lower in the meantime.
Yeah, that makes sense. I took an assignment on Apple. This is actually, I think this is going to be a pretty easy repair, to be honest. So I initially had some credit spreads, and I put these credit spreads on with this support. So when we had this support right here, I did a 170 by 165, and I ended up getting assigned at 170. So looking at price right now, I'll just do the quick numbers on this. My break even, I've already lowered it to like 165 and change. So I was assigned at 170. The credit spread was about 60 cents. So 169.40 was my break even after assignment. I went in and I sold a 165.50 call for next Friday, got $3.45 for that. So I'm sitting at a break even at 165.95. If it gets called away by next Friday, I'm at 155 profit per contract. So I make some bucks on it right there. But also this is, if we're coming back down to, equal lows, and I'm not saying that Apple can't go lower. I don't know what the market hates so much about Apple right now outside of, their struggles with China, maybe lack of innovation, maybe slower growth. But when it comes to earnings, which will be printing here the first part of May, which is next week, solid earnings for Apple could jump this thing right back up. And, if I get it called away at 165, okay, fine. That's an easy repair. But also this is a stock that's super liquid. I could roll it. I could go out another week and roll it and probably grab another 50 cents to $1 on the upside. Again, provided that it goes up or stays stable during an earnings report.
Sure. Yeah, so, I like the idea of Apple as well. It's gotten a nice, it's underperformed the market here recently, but I think it's gotten tossed out just because it doesn't have that clear, AI play. But I think that there's, the betting against Apple over the last 10 years has been an incredibly difficult game to play. It's an
Sure.
innovative company. They have a bajillion dollars and they can buy other innovative companies that come along. So it's, a lot of times people will say, you're overly exposed to one company when you buy like an Apple or Microsoft or, these behemoths. But really, when you look at what these companies are, they're like 1,000 companies in one. Like Apple
Absolutely.
is a monster company that has bought so many competitors and innovative groups that have come along. Oracle, whether you're talking about Microsoft, whether you're talking about Apple, these companies are not singular companies. They're
Right.
really empires of companies. And so, as Apple pulls back, I don't mind the idea of potentially getting involved in Apple as well. Everybody uses it. They have such a powerful platform in terms of what they do. So I don't know. We'll keep an eye on Apple. That should be interesting here. Chris, I'm gonna give you a little bit of an update. So in just a little bit, Frank is gonna join the show and take over. I got to jump off here for now,
Okay.
but I'm gonna give you the stream here for a little bit. You can take over, do your own analysis. I just want to mention before I step out, guys, if you're new to the channel, you haven't seen Chris before, he comes on, helps us out, hosts the show, adds to the community here in great many number of ways. So what we're going to do is we're going to drop the link to his YouTube channel. Make sure, help us out, go subscribe to his channel, give him some support. It helps us out when you help our viewers or help our guests out as well. He's got a Discord channel, all free value available. So if you haven't already, make sure to subscribe to Chris. And Chris, you got the show for a little bit here, and Frank will join you soon.
Perfect. All right. Thanks, Nick.
All right. See ya.
All right, cool. All right, everybody. So a couple things I want to do some spot checking on. Let me bring over some levels of the day. So we've got the SPY looking at some contracts, gamma levels at 505. We're just shy of that right now. We had a slight gap up this morning. It's all call options from what I see here, 72% to 0. So the bulls right out of the gates are ripping higher. I don't chase the market the first 30 to 60 minutes of the day. So when this comes up here, what I'm looking for is if we have gamma levels higher, I'm looking to see if we can get a chance to buy. If I like long options on the day and play directions, I typically like to do it if we had a gap up, maybe a fade to gap fill, and then look to go long towards my gamma levels. That would be from 500 to 504, 505. You can make a lot of money in there if trades like that set up. So I do this quite a bit. We talked about this in my trading rooms. I have a service called Delta Trader where I teach this type of stuff. Zero DTE is an incredibly, we're talking like liquid instruments, right? So when I first was going through zero DT trading and kind of exploring how crazy it is, if anybody wants to learn how to trade options, I'm not saying jump right into zero DTE, but I'm saying if you get into the arena of 0 days to expiration and just watch how rapidly these option prices move, watch how much the delta changes, watch how much the gamma changes, watch how much the theta changes. Again, all those are the fancy Greeks for its price movement and its volatility movement and its time. So if you watch in a single day expiration how these trades play out, you will learn options way faster. So I'm not saying you have to trade all this stuff. I'm saying, but I essentially crash coursed myself into zero DTE over like a month or two of trading because every single day, opening bell to closing bell, I was experimenting with, could I put on a hedge type trade for zero DTE? Could I do, credit spreads only if I'm long options? What days are better for direction? So long story short, there are certain trades I'm looking for if I'm expecting to see a directional play. And today was a good example. If we had a gap higher, my first trade is not jump right in and buy. My first trade would be if we gap higher, I'd like to see price try to fill the gap and then go up towards my bigger, histogram gamma levels, which show there's more, open interest there. There's gamma squeezes to those levels. And that's where, big institutional money, deeper pockets, hedge funds are going to be forced to make decisions whether they need to, get out of positions, move around, offset, sell, buy. So again, gravitation, liquidity, all that stuff happens in the market. But reality today is we didn't get the pullback. So anyway, it is what it is. We've got a close from yesterday to a current price today, and I compare this between the S&P, the SPX, the SPY. So from yesterday's close around 499.59, we're sitting here. Let me do the math on this. We're up about $4 on the day. The average move should be about 5.5. So 499.50. And currently trading around 503 with highs on the day around 503.80. So minus 503.80. So we're up $4.33 on the day, and the average moves are sitting right around $5.50 or so. So if I put that back, go to the daily, that's the weekly. Let me go back to the daily on this one. So let's go daily right here. So the daily. So the SPY daily ATR is 694. Wow, we do have some increased volatility, which means this. On the SPX, we're looking at about a $60 to $70 move or 60 to 70 point move on the SPX. So like I said earlier when Nick was on the show, I do have a position here. Let me change the color. Position here where if price stays away from this level, I'm collecting full credit this week. I have an order right here as well at 51.65. Let me see how that one's doing. I don't think that filled yesterday. I put this in as a pending order around $1, and this is out to this Friday's expiration. Let me see if that one is pending and just hanging out. So let me see if that one's in SPY. Let's check this account here. SPY, those are filled positions. Okay, so if I go to the SPY right now, up a few bucks on the day. If I get to, I told myself if I get like $100 out of the SPY this week, I'm probably going to take some profit. 1, 2, 3, 4. I got in here for a debit of around 570. Right now it's trading for $6 and change. It's not enough. I mean, it's not enough for me to say I'm going to take profit on it. I'd like to see if we can have another, let's say that the SPY today gets up to 505. That's another $1.50. If I can get this trade to work out with another, 50 cents of profit, maybe another 50 to 60 cents of profit. If like I said, I'm up $1 net credit, I'll probably end up taking it today. That'd be only in the trade for about a day. And that's right around that 20% take profit. So let's say I get 670. Well, I can just say I get $1, right? If I get $1 out of a $5.70 debit, I make 17.5%. I'd like to make, about 15 to 25% if I'm going for high probability. Those are pretty good levels for the week. All right, let me see here. Ben's asking about dollar yen and where the carry trade to the upside, but we also know Japan's pretty uncomfortable at 150. Ben, if they were uncomfortable at 150, I don't think they'd be sitting at 154 and change. And if you've been tuning into the sessions here at A1 or tuning into my YouTube channel or heard me at all in the last 2 years with my trading rooms, the yen is a currency pair that, look, here's what I will say on the dollar yen. It's going to be really easy when it's appropriate to sell. I don't think it's now. If you want to go to the dollar yen and you want to sell the dollar yen, the easiest trade is going to be right here. When the dollar yen is on this side of the trend line, that's when you start looking to sell. If you are trying to call the top, this yen can go way higher than you think and drift higher than you think. And that breakout at 152 and the breakout above this high, all of those to me are screaming, I do not want to force a sell trade. Now, in order for this to turn like it did in 2022, it took 3 levels of intervention over a 3-month window. Now, if we start to see that the BOJ is intervening, we do have monetary policy economic outlook this week from the BOJ. That's on Thursday to Friday. If we come back by the end of the week and all of a sudden this thing is down like crazy because there is noticeable intervention, then sure, we can have that conversation. But I think after finally getting out of negative interest rate territory, you can still see the carry trade is happening. I mean, the Swiss last week did the same thing. It spiked down. It's pushing up. We had this big spike on Swiss pairs, and they're right back up. You have big spike on yen pairs and right back up. The carry trade is still alive and well. I don't think it's going to unravel. So if I'm going to make a lot of money on selling the dollar yen, it's going to be over here when it's obvious, not trying to guess where this thing stops going up. Because I think realistically, we're at 154 and change right now. Why does it have to stop at 150? It clearly didn't, and it's not. And if you look left on the higher time frames, we could go all the way back to 170 or 180. I mean, look at the monthly time frame, right? The last time we were up into this territory, look, we broke the highs from 98. That was around 148. We had the intervention levels at 150. That's now become like this psychological level that BOJ doesn't care about right now, So anyway, what stops us from going to 160? That's our level from 1990. And then what's even crazier is you have a 1990 high, and then the rest is all the way back here into the 70s. Now that's all the way back here towards like 178. So do I think we go to 160? Possibly. Okay. Do I think we get to 180 without a pullback? I have no idea. I doubt it. Okay. But I do know that I've traded the yen long enough to know that the easiest way to trade it is not to guess at tops and bottoms. Okay. So I need to see something like a bear pattern emerge for me to say I'm going to sell this, which means this has to come crashing all the way back down here, challenge the low, and I would be willing to take a stab at that, but it would be small trade sizes, sell stops, position accordingly with the pattern trade. Otherwise, not even touching it, focus on a carry trade only. All my robots are bullish on the yen, by the way. So my robot is long dollar yen for the carry trade. It's long against the Swiss for the carry trade. And if I'm wrong, my robot's set up for a buy only. So if it takes me out of the trade and then it starts showing sell signs, then I'll switch it over to be a seller. Otherwise, my robot loses once. And then if it continues to sell, I'll flip positions, or if it sells off and I lose and then it buys again and it resumes, I'll make money and do it with a slightly bigger trade size. So that's my thought for Ben on dollar yen. Intervention at 150, it already happened. It's not happening right now. Now we broke at 152. Now we're at 154 and change. I just don't see it changing a lot without having a dramatic drop. And even if we do drop, where? We'd have to, for me to be bearish, we got to take out 146.60. For me to be bearish, we have to be on the right-hand side of the trend line. We're not even close to that right now. So, like I said, all the years I've traded the yen, I've sat through some of these crazy irrational trends. I saw it in 2007, 2008. I saw it in 2012, 2013. We saw it in 2020, 2021. We watched it in 2022. We've seen a lot of irrational moves on the yen where it's not a currency pair that likes to be super technical. The technicals are it breaks trend lines. It's trade what you see. But man, the hardest thing to do on the Japanese yen, and my least favorite thing to do on the Japanese yen, is call the top or bottom and try to fade some of these moves. It is extremely difficult. And when this pair is not behaving technically, when this pair becomes irrational, you do not want to be stuck in that trade. Just telling you. Okay. Pound dollar, if you think it's not bearish. No. And again, if you're talking about a bank, a central bank that's going to intervene, is that what you want to trade? Do you want to trade something that is completely out of your control? Do you want to trade something that makes a little bit more sense technically? I'm just asking, right? Because if you're going to trade in position for BOJ is going to intervene, how long? When? Because that this price can flash crash higher before they intervene. Right? Let's say we have a flash crash to 160 and then we put the top in and then it comes all the way back down to 140. Well, if you're stuck in a trade at 156 with a flash crash 1,000 pips higher, you're on the hook for that trade. It might blow through your stop loss too. So I'm just saying it's the least probable thing would be positioning for, I'm going to be on the right side with the BOJ. You have no idea what they're going to do. They might do absolutely nothing. So I don't think it's worth it. I think if you want to trade right now, Japanese yen pairs, trade what you see. Just my opinion. All right. Big boy's going to take profit on the SPY. Maybe. I think that, like I said, I think there's room on the S&P and the broader market. This market had a pretty aggressive sell-off for 6%. Let's just think about this from a context of I did this yesterday on the channel. I've talked about this in my trading rooms. A 5-wave move. If we go to the weekly time frame. From our 2022 bottom, okay, from the 2022 bottom, if this is a 1, 2, 3, 4, 5, if you're anywhere familiar with Elliott wave theory or wave structure, 1, 2, 3, after we finish a 5th wave, we expect to see an ABC correction. Somewhere between this previous all-time high and this 2023 resistance, that's where I would think that the corrective move is going to finish, and then that would be the resumption of the bigger uptrend. Okay, so although this market is going up, there is room for the bulls to continue to push because the sell-off was aggressive enough for that 6 or 7 day window that we're sitting here at 504 and change. I've got a nice gamma level at 505. I might take profit on my SPY today. Let me see where I'm up right now. I'll tell you that in just a second. But if I'm looking at this daily time frame, this large Monday candle from last week, to me, this is a big inefficiency. So if the market comes back up to this level right here, this is kind of my pocket where I could see price testing this window. That's roughly the 50% pullback from this swing as well. and that's going to be, you know, where the bears would maybe put it in check. So we have, you know, gap higher, you know, maybe another gap higher because we have so many earnings this week. Remember, Mag 7 is reporting. We could see. Okay, I just got filled in ND. I was like, I got bells going off. NDX got filled, and that's this trade right here. NDX got filled for $1 credit. As long as I stay below 17,850 this week, I'm going to make some profit. That should have been just taken in. I can verify that right here. All symbols. And let me check that position. So 17,850 with a 17,840. That's a broken wing butterfly filled for $1. And let me see if my SPX was filled. Partial fill, partial fill. Okay, now, by the way, if I check this trade out right now, let me go into trade NDX. If this is trading for, this better be trading at $1 even, because if it's trading for more and I got filled for $1, I'm going to be a little upset. So let me put in this trade right here fresh. So if we did a 17,850, this is a call butterfly spread. So I'll move the strikes down. So 17,850, and I'm not losing my train of thought on the SPY. Just let me go back to that in a second here. Okay, so this is the trade, 17,850. There's my broken wing butterfly. Okay, so I got filled at $1. It's trading for $1.05. That's fine. And right now, that's still trading at like a 12 delta. Yesterday, it was a 9 delta. Probability is still extremely high. You know, it shows 86% POP right now, is 91% yesterday. This gives me plenty of room to see the market move. And I also looked at this from a standpoint of, you know, if we rip from the low of the week all the way up to that level that I'm defending, from here all the way up to 17,850, that'd be a 5% move just this week. I'm not saying that we can't get that, okay? But the last time we had a 5+% move was when everything was eager and waiting to rip like we had back here in October, November of 2023. Okay, so anyway, SPY trade, where are we at? I think the market, you know, continues to push up. We're hitting a 504 today. Let me check that SPY trade and see if it's worth taking some profit. If I'm up $100, I might just take it, which I'm in 2 contracts, so it'll be up $200. But anyway, this is the level. So that area to that area, earnings wise, we have big companies. So Visa aftermarket today, Tesla aftermarket today, Spotify was a big pop to the upside, Boeing tomorrow, AT&T is a value play. The big ones that I think the market's going to take as far as this rally and continuation for the week, we have to see solid earnings on the Mag 7. We're going to have to see Meta and Google and Microsoft really do well. And that might be enough to keep the market, you know, bullish this week and get everyone excited. But I still think that this correction is not necessarily over. Okay, high to low, Mag 7 can stretch the market up this week, and then we see that the reality might settle back in. I don't think we're going to get to all-time highs right away. That would be an incredible rip. And I would say this: if we do, now let's throw this out there, if we do get to all-time highs over the next, like, let's say 2 to 3 weeks, if this is a, you know, 6% rally, or I'm sorry, 6% correction, and this market rips 6.5%, 7% to the upside to get to all-time highs, we are seeing how aggressively bullish and how, like, stubbornly bullish this market is. You know, this was interesting. Like the fear index started to spike up when the market was down. We went from extreme greed into now a fear reading, just on that fear and greed index on CNN. So here we are, just pushing up a mover. I've got a nice little stretch. Let me check my SPY position, because if I've got $1 rocking in with this gamma or this delta changing so aggressively, right now I'm up $150. I think I'm just going to take the profit. I'm up about 75 cents net profit here. So let me check on the SPY. I've got a $9 credit. We're trading at 650. I'm going to try to get out of here for 650. So replace. Let me try to get 650. I'm just going to take my profit and be done. So let me see if I can get filled at 650. I think I get filled at 650. I'm going to put all these in at 650. So replace order 650. Okay, here 645, replace 650. And that's grabbing about 80 cents profit. And that's within 24 hours. So I'm going to take my chances on that. If it gets filled, great. If it doesn't, then I'll reassess for, you know, tomorrow if we don't have another tick up, but I'll take my profit if I can get it. And replace to 650. And so if I'm in session right now and this gets filled at 650, hooray. If it doesn't and we start to fade a little bit, I mean, we're up to that gamma levels is 504.92. We should be stretching up to 505. That should get filled. It's right there. So if that gets filled, that will be SPY was filled yesterday for 570. So that would be 80 cents a contract. I'm in 2 contracts for everybody. So about 150, 160 bucks. See if it gets filled. Just made $1,000 on Spotify this morning. Have some trades running. I do have some trades on Tesla. We just hit over 505. Like, come on, bro. Give me some extra. We're 648. All right. So maybe another, we'll see if 505 is a resistance point today. All right, really quickly, I'm going to switch over to the SPX. And just got filled at 650. So that trade is done. I'm going to post this in my trading room, trade management update. This is SPY trade management update. SPY closed for 650 credit plus. So plus 80 cents credit per contract. And if I was only in 1 contract, I'd let it run a little bit further. But I'm in 2 contracts. I'll just take the profit now and just continue to focus and see if I get some of those broken wing butterflies to head out. So, you know, all in all, up about 23 grand in the day. No complaints there. And just being protective to see, you know, with a gap higher, you know, obviously the market's excited for this little pullback. But if we start to see any, and I'll say this, if Mag 7 doesn't provide a nice move to the upside, and Tesla could be a bit of a souring to this rally. I mean, Tesla has been so bad. You know, Nick said he was doing a 115 put. I'm curious. Like, I kind of like the idea of if I go to the weekly or monthly. I mean, I know it's a little challenging to say, you know, where would I buy Tesla? But I would say if I get Tesla back here at, you know, 2023 lows, or we're talking, you know, COVID lows, which are all the way down here towards about. Oh man, that's ridiculous. I know this was priced in differently during COVID, but if we revisited the 2023 low before this thing pivoted hard, that you know, end of the year, I think I'm going to put in like $100 put on Tesla. Let me just double check the buying power situation. So that'd be good. That'd be good. That'd be good. I could probably do at least a 1 contract trade. I think everyone except for that top account can handle that. It'd be, I mean, it wouldn't go out super far, but let me check Tesla. So if I went out to May 17th, I want to put it at a price where I'm happy to own it. $100 out to May 17th. That's a $24 cycle. What's up, Frank?
Hey, what's up, Chris?
How you doing, man?
Pretty good. How are you?
Good.
I hear you talking about Spotify, and now you're on SPY. How's that going?
Yep. So Spotify closed out for profit this morning. That was an earnings play. It's all the way up to 312. I had a 270. Let me check my position. I think I had a 272, 272.50 long call with a 310 short. So it was essentially a reverse iron condor. It was all over earnings. I calculated about a $32 to $35 move, and so I would have maxed out roughly. You know, today I looked at let me see what it's trading for. If I put this position back in for something similar, let me check all symbols here for Spotify. So if I put in a similar trade, so right now my trade that I took out this morning for $30, it's trading for $30.30. The fact that I took the trade yesterday, closed it out today, and it's barely fluctuating higher. You know, here's why. Because I have the sell side, it should realistically be up a lot more. But because my sell options have changed so much in value because of that big rip to the upside, I'm not getting the full credit. I was going after like 37.50 of max credit. But because my sell trades were out to next Friday, all that decay has to still work out, and the deltas have changed. So my sell side is actually kind of trash right now, but I've already closed it out from, I took the debit at like $20. I closed it out for $30. I made like, it was like $9.45, $9.50 on a lot of the accounts that I took this morning.
Gotcha.
So in 24 hours, that's a pretty good trade. SPY just closed out for profit as well. We're up to 505. That was a gamma level I watched today. I took a SPY trade yesterday. And I just did a neutral, again, reverse iron condor, where I'm looking for a little bit of volatility play. My long position was a 500 or 501. 501 to 512, and I just kind of bracketed like, well, if I was going to sit in this ideally, then I would let it go all the way up to 511, 512. But what I did instead is I took the 501 within the next day's trading. I mean, we go from 501 to 505. I've got all that delta improvement, right? So the delta gets better for me. And it did it in such a short amount of time that I have all that time premium left on the opposite side. So I took the trade for 570 debit, closed it out for a 650 credit, took the 80 cents on 2 contracts. I'm just doing some profit protection. Another thing I was looking at before you jumped in here, Frank, was I was going to go to Tesla, and Nick had said something about doing some puts on Tesla. I think I'm going to do the same thing. I mean, the IB's at 90.
Selling puts, you mean?
Selling puts, like a cash secured put on Tesla, yeah.
Gotcha.
So if I wanted to own Tesla, so I do have an earnings play. So I'm looking at Tesla already for a trade. I can show it right here. So let's see here. Tesla, I've got the 142. And so I essentially did, it's 2 debit spreads. I did the 152, I'm sorry, the 142 long call to 157.50, or the 142 long put to 127. So I calculated a move out to be roughly, $15. And I think I paid $10 for it. I'm looking to see if I can max out around 15. The downside is probably a little bit more fierce because it's been just such an aggressive sell. But I think on the upside, a surprise would be, if we stretch back up here to like 160, then that should help me max out my profit. 142 to 157.50. We get to 160 on the stock price by this week, then that will certainly help my Tesla position for that one. But what I was going to look at is if I just did a naked put where I look to trade 24 days out. I mean, I like Tesla at $100. So if I look over here to these January 2023 lows, that's right here around, $101. I don't think that I'm getting there anytime soon. And I would say that if I went into the May 17th expiration, which is a big monthly expiration, is 24 days out. There's 2 ways I can look at this. If I want to go out a little bit further, June 21st, I should be able to get a decent credit if I went out to $100. I mean, I get $1.30 going out to June, but I also get, if I cut that in half, I get about 60 cents if I did it for May. So I can get 60 cents right now. I would just kind of take the cash. The good and the bad would be, it's 60 cents, I think, is pretty high probability. I mean, it's a 4 delta, so the odds of getting filled there by May 17th are slim to none. If I want to take the shares, I don't want more than 100 shares of Tesla. I don't know. I'm thinking about it. It might be a little income play, but any thoughts on Tesla?
Something.
Yeah, go ahead.
I need to ask you something about short-term versus long-term. I'm looking at this earnings week. I've noticed from my perspective, we got a long-term trend line that it's hitting. And I don't necessarily think that Tesla is going to be one of the big names that it has been back in like 21 and 22. But, with earnings week in play, I have a vertical on this. It's on either side of the price. This was yesterday. So if price breaks underneath this trend line and goes to, I think it's 140, 141 or something, I'll just take the loss. But if earnings comes out better, if revenues are projected higher in the coming quarters, things will work out. But I wanted to ask your opinion. Are you're long-term bullish on Tesla, but you're going down to $100 a share, so you're waiting for a steeper drop in price. So I was wondering, do you think this is some sort of short-term move that we could get to the upside, or are you just expecting another dip for the next, I don't know, couple months?
Well, let's talk this for a second. So, I mean, earnings is always like it's a coin flip. I mean, the one thing I like about earnings is it's an automatic catalyst. The market should move. The broader market is lifted when you have large market cap stocks like a Tesla, like a Meta, like a Google, like a Microsoft. I mean, the market's going to move because of what earnings are bringing in this week. But what I was looking at for expectations, if we go to Tesla, okay, I mean, this is one way that I'm pretty confident if I trade some of these options and I trade earnings, I need to see that the market is capable, or at least the company is capable with its earnings play to consistently deliver the expected move. So right now on Tesla, if we go to earnings history, the average print is around 11.36%. Now, I know when I calculated this out yesterday, we started out with 5, 6, 8%, then we got to 9.5. 10.6, 10.7, 10.5, 10.5, 10.96. Now it shows the average is 11.6. I calculated out mine based on a 10% play. Because if I can price out my earnings on Tesla with the expected move being 10%, this is how I know that it's a pretty good opportunity and probability. So I'm going to say that Tesla should move about 10% based on earnings, and we're trading, currently trading around 145, but where the week started, I mean, this is what's nice. Look at the candle, Nick, or sorry, Frank.
It's all good.
The candle hasn't moved a lot, right? I mean, we're looking at the candle for this week, low 138, high of 146, and the weekly trading range. This should be probably a $15 to $20 expected move for the week. If I go to the weekly ATR, I know we talked about this yesterday. So the average move for the week on Tesla all by itself with no earnings catalyst is $18.73. I calculated out an earnings play that's a little bit more conservative. So if there's a big hit in a positive way or a big miss in a negative way, this could easily jump, $20 to $25 in earnings, good or bad. So let's go back to this piece of software here, or this website, and I'm going to say that we're going to calculate. There's two ways we can calculate this. The actual earnings history shows about 11.36, and I'm going to conservatively say it's going to go 10%. So when I look at post earnings reports, this is 10 earnings reports. Now, all I need to see is how many times has Tesla reached 10%. So you can see here that the last earnings we had in January, within 1 day, we reached 12%. So that checks the box. I need it to be greater than 10%. Okay. So if we're greater than 10, then that's going to get a check from me. So 6 to 9, 12. So 3 days in, that one checks the box. 4 to 9 to 10, that one checks the box. 8 to 9 to 9.99, 11.3. This took 8 days, but this one still checks the box. 10.75 to
these are earnings reports, right?
Or these are earnings reports, yes.
All right. I'm trying to focus my eyes and see what that's saying.
Okay, you want me to make this larger?
Yeah, if you could.
Okay. That better?
Yeah, so okay, you're expecting high volatility.
So all I'm saying is from the previous 10 earnings reports, and this is relatively recent. This goes back to 2021. We're talking quarterly earnings for the last 3 years. 10's a pretty good number to see if I've got 10 in my sample size in the last few years, and how many times out of 10 did we get to at least a 10% expected move? So that's what I'm measuring. So this took within 1 day, we were at 12%. Within 3 days, we're at 12.65. Within 3 days, we're at 10.73. Within 5 days, we're at 10%. 8 days, we're at 11.3. That's over a weekend. That still does it. 10.75. Look at this. 3 days later, 23%. Way beyond. This one does not get there. Now, it shows 21 days later is at negative 20. I'm not holding option trades, especially around earnings. I'm not holding them that long. This one gets right to the 10% mark. 8 days later, gets to 13.49. This one checks the box. This one, 10.2 at 8 days. That's right on the number. It's okay, but that's an iffy one, right? But that's there. Still gets 10.2%. This one goes from flat to 11.55. That one checks the box. And this one, 18.37 5 days later. So what's nice about this is probability-wise on Tesla, 9 out of 10 of the previous earnings reports has at least gone the expected move, right? And that's what I'm pricing out in my trade. If it goes the expected move, I should have a probability of profit on the trade. Okay. And that expected move for me is 10%. So the stock is trading at 144.70 right now. Okay. So 144.70, and multiply that by 10%. I'm expecting a $14.47 move. The actual ATR for the week is $18. So I'm conservative. The market's expecting $18. I priced out my earnings play on Tesla. Let me go to a little bit bigger, see if I can make this larger so you can see it. Tesla general. Let's make this larger there. So if I go to Tesla, and I'll do this from scratch, okay? So right now we're sitting around 145. If I position this and say, okay, before earnings, because earnings is today after market, if I buy the 145 call and I buy the 145 put, this is what's interesting about how prices are so aggressive right now, and the premiums are too expensive. What did I say is the expected move? About $14, $15
something.
Yeah.
So are you just doing a straddle?
Not yet, because look at what the market would charge you if you wanted to do a long straddle. Look at what you have to pay. You have to pay $19.65 for a move that's, to me, safely $14 to $15. If I'm long an option and I'm paying $19 for a $14 to $15 move, that makes 0 sense, right? So what I'm doing is I'm willing to say, okay, if I'm at 145 for my long option, I need to sell something against it to lower my cost basis. So if I'm anticipating a $15 move, even if it's conservative, 145 to 160, I can sell the call at 160, and then the 145 to 130, I can sell the put against that. So now I go from a $19 debit to now an $11 debit, and this is the good and the bad. The good is probability of profit here is fairly high. I think we get a $14, $15 move, which allows me to grab some profit. Now I'm paying $11 and change for it. If I max out at 15 bucks, right, I can make $3.70 net profit. Now, the probability of that trade to me is pretty high, which is why I took the trade this week. Now, my debit on Tesla was about $10 and change. I got in for $10.70 yesterday. So I'm doing the same thing. It's a $10.70 debit. Probability for me is that we're going to hit a $15 move, and I did $15.50 on the upside. I did $15 on the downside. If we have a blowout upside, blowout downside, I'll max out at 15 bucks. I'll make, it'd be 10.70. So I'd make $4.30. So $15 minus my 10.70, I'd make that per contract to be $4.30. So if I take one share, one contract, or 100 shares, it'd be 430 bucks. So this is why I don't just go long the trade. Like somebody asked, are you long Tesla? I'm really not. I'm trading earnings. And so if earnings
volatility.
Exactly. I'm directionally neutral, but the catalyst with earnings, the market moving the way that it's moving, we should have the market do something good or bad. And I'm telling you, like, there is no, I mean, Netflix is a good example, right? Netflix last week, if I go out of here, okay, go into Netflix last week.
Wait, let me ask you a question while we're on Tesla.
Yeah, go ahead. Sure.
So you basically started with the straddle, or maybe was it a strangle? You bought and sold a put close to the money, like on either side or something.
So I can do this and lower the cost basis too. If I split the difference where I'm slightly higher on the call side, slightly lower on the put side, so it's I guess by about 50 cents is out of the money.
Yeah, those two are buys you got right there, and then you go out of the money and you sell a call.
Yep.
Is that what you said?
Yep. So the 145 and I sell the 160.
Okay, so now you're going under in the money and you're selling a put.
That's out of the money for a put though. Right.
Oh, right. So you're going out of the money, selling a put.
Yep.
Meanwhile, you have two buys in the middle.
Correct.
I'm trying to figure out the shape of how that would look.
Let's build it. I'll show you. It's gonna look like this. It's gonna be a reverse iron condor, so it's gonna look like this. If I put the strikes at the same level, it's gonna look like this. If I put the strikes one strike apart, it's gonna look like this. So this is my risk, right? If price moves and covers the cost of my debit, what I need is price to move about $10, right? If price moves $10 one way or the other, this is where I get my profit. At $15, that's my max profit. That's what it's going to look like, and I'll just build it so we can confirm it. Let's go to...
What's the difference? Why don't you just take a reverse iron condor trade instead of I guess, manually typing in each entry?
Because I like to base it. I don't know. I mean, I could have taken the reverse iron condor, but where's it put me when I do it? If I did a, let's go reverse J Lizard, reverse iron condor. Okay, so I'll clear this. If I put in the reverse, here's why, because I've got to then drag the legs somewhere on there. So reverse iron condor, go, right? So it's the same thing, but reverse iron condor, I'm going to move these closer and I want to move these further away. So for me, it's like, I know that I'm not interested in reverse iron condor wise, like keeping the legs tight. I think of it as just two debit spreads. I know that if I'm buying the 145, I want price to the upside to go to 160, 165, right? If I buy the 145 put, I want price to fall to 125. So,
Okay.
I mean, I can set it up that way, but that's why, like, well, I look at price right here. This little floating, dot is live price. If I buy the 145 and I buy the 144, you can see that it's the broker just by long options alone is going to charge me $19 for just being long. Now, probability of profit, you're looking at 47%. Based on the expected move, it's $19 with the implied volatility. All these things check out. I am conservatively saying this thing moves like $14 to $15. So I will sell that 160. If I wanted more reward, I could do the 145 and then I could sell the 165. I could do the 145 here and then sell the 125. Okay. Now this gives me more upside profit potential and I'm paying a little bit more for the debit. But as I said, if I only get a $14 to $15 move, if I only get that, I'm paying $13.52 for what I think is a $14 to $15 move. That's a very small profit. That'd be like a 10% profit. So if I tighten this up a little bit, okay, and I do the $15 instead of the $20, I pay less for the debit, and that gives me a little bit more upside potential as far as net profit. If now I get that $14, $15 move, now I can make, $2, $3, $4 in net profit as opposed to $1. Just based on I'm expecting a $15 move. Does that make sense?
Yeah.
Yeah.
Okay,
So
but if price does not move, are you looking at a week out or how long is this?
I did out to the 3rd. So next Friday. I'm giving this,
Okay.
let's go to the expiration again. So this is, oh fudge, I'm in the wrong one. This needs to go out to, I was looking at the naked puts at first. So I went out to the 3rd.
Okay.
Yep. So I went out to the 3rd, which is next Friday, and that's 10 days out. And so also with my 10 days out, I can get into, let me go to the 3rd here. Let's go Tesla, edit spread. I don't know why these aren't populating here. Hang on a second. That's weird. I typed it in wrong. That's why. Tesla, edit spread. 1, 2, 3, 4. So if I go to the 3rd on all of these, so let's say we took the trade right now. Current price is trading around 144. So if I do call, put, one buy, one sell, one buy, one sell. If I sell I buy the 145 call, I'll move this up a strike. And then I buy the 144 put. I'm going to go out $15. This is going to be my 160 that I sell. And then I'm going to go down to this one. What's interesting is the strikes. Once I get to 130, they start going by $5. I guess they don't. Never mind. I can go $15. All right. So exactly $15 in the upside, exactly $15 on the downside. It's going to look like that. So because I have one strike difference, you can see that little flat spot. But I understand that this trade isn't like, you're like, oh man, that looks like way too much risk. Well, probability is we're probably going to get that $18, $19 move, which brings these full profits for me into a higher probability. If I wanted to shrink that, I can do this. So if I want to go out on the 165, let's go 165 here.
Well, you
and then
said
go
your
one.
average true range was 15, right?
Well, I said based on earnings. So the average range is $18 on the chart, but my earnings reports have averaged about $14 to $15.
So if I'm thinking about it right, wouldn't you want to go out 7.5 in either direction instead of 15 on either side?
Sure, but you want to see how expensive that is, or you want to see what the probability of profit is? It's higher probability of profit, but just so you're talking about going 7.5. Yeah, I'll show
You're
you.
saying
So
like the risk gets heavier and the profit is small.
Remember that if price blows through your sell legs, all of the deltas change so much that your losing side of the trade is going to be like max loss right away, and your winning side of the trade isn't going to be maxed out because you have to wait for all the time decay in your sell side. So the sweet spot for me is I want my sell positions. Oh, it's got other 650. Okay, cool. So I'm filled at 650 on everything now. That was for the SPY. All of my, sorry, dude, all these bells and whistles going off. All of my my sell sides, I want it to be about the max move, because that way, if it exceeds it, it changes the value so quickly that I then need to wait on the time. And so because I went out to the third, I want my sell side to almost be the capped move. So I'll show you. If you said, well, if you only moved at $7, let's go sell the 152. Okay, let's sell the 152.50 on the call side, and then on the put side, if we did like 137, okay, and we're going $7 and $7. Now look at this. Look at it changes it to.
Okay, yeah.
So you pay $6. You pay $6 for a max $7 profit. Okay. You can still lose on the trade, right?
Yeah.
So that's all. It's like I'm trying to give the price a chance to work. I mean, for me to really make this trade awesome, I mean, if I wanted to say, let's go to $25. I mean, we expect a move of $15. The market ATR is 18, 19 because Tesla's been selling off so aggressively. If earnings is a big fat ripper, 149 or 145 to 170, that's a $25 move. 144, let's go $25. That'd be 119. Is that right? 119. There. So if you want to see a reverse iron condor that looks a little bit more appropriate as far as reward to risk, this trade, I pay $13 and I'm giving myself about $25 of upside, right? So $25 upside minus the $13 I pay. If it makes a $20 to $25 move, I can take a $13 debit and turn it into a $25 credit, which means I can still make $12 net credit. That's a good trade, right? That's almost a 1-to-1 with earnings. And that's what earnings ultimately is. Like, I rarely get like these big, 3, 4, 5% move in earnings. If I can have a 25% take profit in earnings, I'm happy with that as far as my debit. So if I put on a $10 debit and I can close out for $2.50, I'm pretty happy with that. In Tesla, okay, if I put on a debit for $10 and 70 cents, it was 70 cents, and I can close it out for $15, I'm really happy with that. Spotify paid $20, closed it out for $30. I'm really happy with that, So again, earnings it's something I like to trade for the catalyst, but I've got to price it out first. I've got to be, very strategic with how to make sure I'm not overpaying for the option. And I want to make sure that my probability is, I showed that going back to 2021, 9 out of 10 times Tesla has hit the expected move. So that's what I'm building my option trade around. I think it can. I think it can hit the expected move.
2 weeks, right? Or 5 days. You said 9 times out of 10 it hits the average true range within a span of 5 days or 2 weeks.
Within the week. And so with the earnings play, if I go to that Option Slam website again, a lot of times this is within 1, 3, 5, 8 days. My expiration is 10 days out. So if I look at this column right here. Okay, how many times has Tesla crossed at least 10%? It did it there. It did it there. It did it there. It did it there at day 8. It did it there. This one did not. This one did. This one did at day 8. This one did at day 1. This one did day 5. So of going out, 3, 5, 8 days, as long as I have that window in my option trade, 9 times out of 10, we've hit that expected move. So I know that's like a deep dive into, options, but earnings plays especially, it's still a coin flip, dude. I mean, at the end of the day, it's a coin flip. I don't know what Tesla, good, bad, and different, because think about this. It's been so beat up that we could have positive earnings on Tesla and it can still drop because there's so much selling pressure in it right now from the other stuff, which is they're cutting the cost of their cars, they're missing delivery, delivery expectations. The wild card is Elon Musk. So I mean, the market is really hating on Tesla, and it might continue. Like the sentiment's so sour, I don't know, but if we have a $15 move, I can still make money, right?
Yeah.
All right.
I got you.
Cool.
That's a stuff I didn't really look at before, just the average move of individual stocks. But
yeah, and so with you, if you're taking some of these earnings plays, I mean, one really helpful thing to look at is take a look and see what the week is expecting, right? If the market at least hits this expected trading range for the week, that's how you can kind of price out your options as well. So obviously I'm going a little bit further with that website. I mean, I subscribe to that website because to me, it's really helpful information to know that, of these last 10 earnings reports, how many times did it hit the expected move? If it's, 7 out of 10, 8 out of 10, 9 out of 10, that's a pretty good trade to hit earnings. Like literally yesterday, Spotify, 8 out of 10 times it hit the expected move. We priced it out. We got filled with our credit today. So I'm pretty happy with that trade. Hopefully Tesla's the same type of thing. I didn't do that in Meta because Meta is really expensive. So I did just deepen the money credit spreads like I did on Netflix last week. So Meta has earnings Wednesday after market. I looked at Google and Microsoft as well, but I just didn't like them enough. And so these are the trades I did on Meta. I did some deep in the money. This is a deep in the money bull put spread at 535, deep in the money bear put spread. I'm sorry, bear call spread at 430. So I just need Meta to do something, right? If we fall and try to fill this inefficiency in this big pocket, I collected $8 of credit on a max risk of 10. So I'm only risking $2, right? So all I expect to see here is if I'm remotely right where price is going to test my highs or my lows, then my $8 credit can probably decay down to like, $6, $5, and I can maybe make $2 or $3. So different way to trade it. Go ahead.
Say like 3 days before the option expires, your price for, let's say, either Meta or Tesla runs very hard out of that range. Are you looking at a certain price? If you're paying, what'd you say, like $9 for this?
For Tesla, let's talk Tesla again. 1090.
1090. So
1070.
where would you be looking? Say even in the next 3 days.
Yep.
Where would it have to go for you to be like, all right, this is enough for me? I'm gonna close.
That's a great question. So the buy trade that I have, the long call and the long put, I put in at 142, I believe. Let me check the positions here. So positions, Tesla. I have the 142 long put, the 142 long call. So I need $11 from there. So 142, let's go up to 142. I need $11. So 142 and 11 would be 153. Set a turn alarm at 153. And there it is. And then this one I can move up 142. I need it down to 131. If price hits either of those two levels, I at least know that I'm break even on my trade. So that's where I need it to go as far as covering the cost of my trade. Now, obviously, above that or below that, now I'm going to start talking about managing my profit. I'll keep it simple. If I am at a 15% take profit of my debit, I'll probably protect it. If I'm at a 25%, I'll protect it. Now, the nice thing about earnings is we might come to the market tomorrow and this Tesla move might be trading down to 125 or maybe trading up to 155. I don't know. But whatever happens tomorrow during opening bell, if it's already beyond my levels, I'm probably going to manage profit and take my, $1, $2, $3 of credit. If I'm up after the immediate reaction of earnings, I'm usually not sitting around waiting for expiration. I'm just going to take my 15, 25% take profit. And in hindsight, I can look back and be like, oh, wow, if I would have done this. But if I'm up 15 to 25% routinely, I don't need price to make this big move. I just need me to get paid. That's it.
I got you.
Yeah.
All right. Cool.
Good stuff. So I know as we were chatting here, we had some questions come in. I'm just gonna quickly answer those. So JPY pairs. I spent 10 minutes on the dollar yen with somebody that asked about the carry trade and the BOJ intervening. And I said, I don't think it's going to happen. I think the BOJ is going to continue to do nothing. They're going to stay at, 0% or 0.1%, not change monetary policy. The carry trade, the pre-summer push, I think the yen stays weaker just because the Nikkei wants to go up. The U.S. markets want to go up. It's an election year. There's this market doesn't want a lot of disruption. There's already enough noise going on in the background. So I'm not trying to look for JPY strength. I've got robots that are deployed going long against the yen. Somebody's asking about gold. Frank, you got any thoughts on gold, dude?
I'm long gold right now.
Okay.
There are talks that the tensions or the sentiment around the tensions has eased, but I'm still not fully convinced, if I'm being perfectly honest. Earnings is kind of muting a lot of this, whatever's happening over there. The sentiment overall in the stock market and the yields is kind of revolving around where stocks are going to perform and what revenue projections are going to be for the next quarters with these high interest rates. So it's a big mover for the markets. And in turn, it's messing with the yields, and that's messing with gold. Gold is still in a range that I like. So I bought it actually yesterday. I bought GDX, which is a gold miners ETF.
Yep.
And price is still, it tested that $2,300 level, rejected. Still have a lot of the day left. So if it ends up being a hammer to the upside, I'd be happy with that. But if it breaks underneath, I'll have to reconsider. I have a stop at 32.12, and price barely missed it. I think it went down to 32.20. So still hovering in this trade, not at break even yet, but I'm looking at hopefully another test at the 35 level. So that's where I'm at in gold. But we need yields to come down.
Yeah, I mean they're not. We have PC on Friday too, so we'll see if the yield story continues to churn higher with that 10-year, especially that 10-year yield. If that creeps back up to 5%, that was a pain point heading up there with the correction. So we'll see. I mean, again, this is just opinion stuff, but I don't think that the Fed wants to raise rates this year at all. I think if anything, they're just going to try to squash the market by saying higher for longer. Maybe they don't cut in 2024, but we're going to see. And
yeah, I'm with
think,
you. I didn't. Oh, sorry. Go ahead.
No, that's fine. I was just going to say that I don't think the Fed is going to do anything to actually take an action this year in monetary policy outside of cutting. If they feel like it's safe to cut, they're going to cut. If they feel like they should raise, there's probably the last resort. I don't think they're going to raise necessarily unless if we get a oil crisis and all of a sudden we're talking oil's up to 125, 130 a barrel. Sure, we're going to squash something and we're probably going to break the market a little bit. And that would be the classic Fed, because the Fed is reactive. They've been so lucky that they've gotten us through this time with a soft or no landing. So I just don't think that moving forward that the Fed is going to be that good at navigating this stuff. I think they're going to be reactive and something's going to break. So I think their last move would be during an election year to raise rates and possibly, crumble the market on what was supposed to be 7 cuts, then expected to go to 3 cuts, now maybe 2 to 1 cut to 0 cuts. And all of a sudden they raise rates and do the complete opposite.
I don't know. I think if anything, they're going to keep it where it's at. I don't think they're going to go any higher, but you're right though. Something could break, and then they would force their hand. But I think there's going to be fears of rate hikes. I just think that overall they're going to stay where they're at. They're open to rate cuts, but that doesn't mean they're going to do it in the next 6 months or 1 year. So might just stay where it's at all year, and we'll see what that does to the stock market and earnings over time. So
yeah. And I think earnings this week are front and center. I think when you've got however many trillions of dollars in market cap are up for grabs with 550 companies, and your Mag 4, Mag 5, of the Mag 7, you've got some big players this week that the market's already up a little bit. Earnings are coming in relatively positive. I think Tesla is a one to watch, and then certainly Meta on Wednesday, Google and Microsoft on Thursday. Then we have some energy ones on Friday, which I think will be interesting as well. I tried to price out some earnings plays on XOM, which is ExxonMobil, Chevron, Phillips 66. The problem with all of those is those expected moves are like $4. So unless I had 50-cent spreads between my trades, I can't price it in enough. Last quarter, I took these trades. I traded all 3 of these, and one of them paid out more than the other 2 combined, and actually net for all 3, it was like lose on 2 or break even on 2, and then 1 just huge winner. but that was because it was like 2.5 standard deviations. It was a crazy move. It was Phillips 66. It was supposed to be like maybe a $5 move. It went like $15. So that was just a blowout move for earnings. Anyway, I'm not trading those on Friday. I'm good with, I'm in with Tesla. I'll be watching Boeing because I've got some credit spreads. I've got meta trades running. I couldn't get a decent price that I liked on Google or Microsoft, so I'm staying out of that. I got assigned on Apple, so I'm repairing that for next Friday. Closeout trades on the SPY today, closeout trades on Spotify. I've got a couple other earnings plays with Blackstone, which is BX, and I'm looking to see if this one is up to 125 right now. So I've got a 123 call side. I had the 123 put side, but it didn't come down low enough for me to take profit. I was looking to see if I can take profit on this 115. But if this thing's going to rip and continue to rip, 123, I need this to get up to around 128 or 129, and that'll be profit. So I'll keep an eye on this one for the week. And I'm pretty sure my Blackstone expiration is this Friday. Let me check that one. So BX here. Yep. So I've got the 123 long side. Now that we're trading at 124.87, I might as well see it head up towards 128, 129, get me some profit on that one. But that's just another reverse iron condor. So all in all, good stuff. Yeah, I guess I'll see you guys tomorrow, which I'm excited to see how Tesla comes in. If you want to, Frank, you want to come on tomorrow, let's chat. Let's chat through this Tesla stuff and see what else is kicking.
Well, yeah, I may join you on this betting on volatility.
Okay.
Earnings season is pretty good for that, so I might look at a couple things. Yeah, I'll try to figure out what a good range would be for different stuff. So
okay.
Yeah, we'll talk about it tomorrow. Sounds like a plan.
Okay, I'm good with that. Everyone for watching, thanks for being here today, as usual. And we'll see you soon. So we've got lots moving and shaking. Markets up today, which is good, and earnings coming in for the entire week. Keep an eye on those earnings reports. Keep an eye on the consensus. And like I said, I think, and Frank, you and I talked about this offline with some of those broken wing butterflies, but I am positioned for that trade. If we stay below 51.65. That's credit for me this week. If we stay above 48.10, that's credit for me this week. So between some earnings plays, some index plays, some broken wing butterflies, overall should be a pretty good trading week.
Yeah.
Fingers crossed, of course. Yeah, be fun. So
yeah, okay. Sounds good. Well, I guess I'm going to let you go, Chris, get back to work and stuff. But thanks for coming on.
Okay, for sure. Thanks, Frank. All right, sounds good. Thanks, everybody. See ya.
Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.